my comments here. Se hay algún otro comentario que pueda hacer, Noreli, mismo en español, que para expresar mejor lo que discutimos y que está en nuestra propuesta de borrador de carta, ¿no?
Claro, como lo comentaste. Gracias.
Okay. So then, Easton, as we can move on, or we are open to listen to you on perhaps you can have some inputs because you are listening to a lot of people, and perhaps you can give us some feedback on this discussion.
Nothing specific to say other than the issue of timing that you raise is one. That is the nature of updating the standard every so many years. So at the next review, we will look to see what work has been done to update the relevant IFRSs that correspond to section 18 and section 21. But I understand the need for guidance. You mentioned guidance on how to apply the existing sections with existing concepts, or is it guidance on applying the section 18 and section 21 with the new concepts you would like?
Easton, if I just can, before jumping, if Jose wants to reply to your comment, but just, and correct me if I'm wrong, but in our proposal, what we have done, and we are not going to sort this out, and as you well mentioned, Jose, we have this in IFRS full, and we are surviving. Fixing it is not something easy. We are now having this project on provision that will fix part of it, and probably in the intangible project we will also address it. And then of course it takes some time until we incorporate this into the IFRS for SME, but we do not anticipate any major issues because we have this difference. We already know the points where, for example, we have some issues in terms of the definition in the framework and the definition that we have in the standard, but we are addressing this one. But for the point that I would like to make is just we have added a paragraph, and please correct me, Easton, if I'm wrong, but we have added the paragraph in the framework, in the section 2 actually, to make clear that what is in the other sections prevail in relation to what is in the section 2. Similar concept that we have in IFRS full. I mean that the specific standard, it prevails in relation to the framework. The framework is a basis for issuing the standard, but is not in itself a standard. That's the, and we haven't had this paragraph before, and we are adding just to make it clear.
Jose, I think you're on mute.
Oh, sorry. One important element on it is to consider that in our region, SME is very relevant. The quantity of small and medium entities is huge, no? So only in Brazil you have more than 5 million. And if you consider the whole Latin America region, it can be more than double. And we know that the management structure in those kind of entities cannot be compared to the larger entities. So then any guidance that we can provide for those kind of entity is very important, and not only in the core standard or in other part of the set of standard would be important, and as well as in the educational material. So when we talk about management of those small entities, that the operations they are holding, they have problems in capitalization because we can have different views on that, or in accounting for liabilities, we have difference in concepts. It's a very, very complex discussion due to, as I said, the managerial accounting is not so strong for those kind of entities. So though any material that we can provide in terms of orientations, guidance, simplification is relevant, is a different view when you look into the full yes gap that ISB has a larger experience in application of that, I think, than for those small entities that we even don't know exactly. For example, if you take different countries, you don't know the level of application for small and medium standards. So is more disruptive than when you look into the full IFRS. So that's why I believe that it's important that we take a little bit the function or a different view for those kind of entities to assist them in developing high quality standards. And considering mainly now that we are in an ecosystem on which those small entities, they operate with larger entities, and those larger entities, they pose a higher quality standard for those small ones. Even if we consider those entities that are in, let's say, starting the operation as invention or new ideas, so the startups are boiling. So it's important that we address, and they have sometimes they have a very sophisticated manner to conduct the business, even if it's small, because they have incentive to partnership, or they have incentive from other institutions to go in that direction. They receive private subvention sometimes. So it's a very interesting environment, and so we can provide more orientation, would be great. So that's more or less is the sauce that we put in this food to digest it in the discussion. So that's my complementary comments.
Thank you. That was very useful. We move on to next question on definition of control. And our proposal is to update the definition of control to align with IFRS 10, but also at the same time retain the simplification that already exists in the standard, where there's a rebuttable presumption that when an SME controls an entity and owns the majority of the voting rights of that entity, control is presumed to exist. So question 3 asks, do you agree with the proposal to retain the rebuttable presumption as a simplification when updating the definition of control?
Yeah, Glass is in agreement with maintaining this rebuttable presumption as a simplification for the definition of control, as it facilitates a lot the application by those entities. Is not conflicting with IFRS 10 on the other hand. So we know that defining control imposes a lot of judgment in many circumstances. But due to the characteristic of the small and medium entities, I believe that the rebuttable presumption will apply a lot, considering the experience we have in our region. We are in agreement.
Great. Then we move on to question number 4 on the impairment of financial assets. So the proposal here is to introduce an expected credit loss model for some financial assets measured at amortized cost. Here is worth noting that the expected credit loss model is the simplified expected credit loss model that exists in IFRS 9. So steps have been taken to simplify the model that would apply to some financial assets. The financial assets that would apply it would be those other than trade receivables and contract assets. For those assets, trade receivables and contract assets, the incurred loss model would continue to apply. The incurred loss model is the model that already exists in the IFRS for SMEs standard. Therefore, this proposal will mean there will be two approaches to impairment of financial assets in IFRS for SMEs: the incurred loss model for trade receivables and contract assets, and then the expected credit loss model for all other financial assets. So the question asks, do you agree with the proposal to introduce the expected credit loss model for only some financial assets? And do you agree that that proposal strikes the right balance in deciding which financial assets should apply the expected credit loss model?
Well, again, here is it's a crucial question, and actually, at this moment, we have a split. So we don't have a dominant view here, and we are arithmetically saying we have a tie, and we recognize the benefits that derives from the model of expected credit losses. I think this is an exercise that is very linked to management assumptions when they do business. If they control their financial flow, they can assume, consider the current and the future scenario to predict what will happen with their clients. So it's so natural us breathing the air. This is looking to the why expected credit losses is important. On the other hand, people tend to assume that my experience with that client in the past will predict what would be the possible losses or the probable losses. So this discussion happened. We don't have a majority opinion there, dominant opinion. And by the end, we have one view that a full alignment would be great. And but if you cannot apply expected credit losses, you have to explain considering the cost benefit of doing that or why it is impracticable. It's one view. The other is to maintain it as it is in the project, and but providing guidance in order to simplify the application. Here we have, as I said, we split. Considering our jury process, this discussion will be completed by tomorrow in the board, and because we rarely change the results of the discussion held at the task forces, but we will consider if we are going to tend to one view or to the other, or we are going to keep it as a split. And in addition to that, as in the previous question, we have some additional suggestions that we would like to pose in our common letter. As for example, instance, without exploring it, but only giving an example, we will suggest to clarify the expression of practical solutions referred to in the paragraph 1126E of the project, and as well as exemplify the application of cost or how to say, I'm looking to the Spanish version here, esfuerzo desproporcionado. I don't have the technical translation to English here, but is the cost benefit, in other words, of how you can provide examples of this situation. So, and these are minor suggestions that we have in the end. I don't know if someone else wanna comment in additional to mine ones. So then I will transfer back to you, Ethan.
Thank you for sharing, and it's useful to know both sides of the argument and discussion that you've been having. One question or maybe a suggestion for the response, if you are able to, you said if we do proceed with the expected credit loss model, we provide some simplifications or further guidance. It would be useful to know on what areas, maybe suggestions of simplifications that we could consider, because we have tried to make it as simple as possible, but we understand there may be other ways we could make it even simpler for SMEs.
Right. Yeah, I think it will bring more specificity and of what we would think of simplifying the life of an SME when applying the SPC model. So yeah, we will put some consideration on that before responding. Thank you.
And just one point that you referred to, Jose, is
Yeah.
the undue cost and effort. You said that you would like to see more guidance on this one. Is it?
Yes, yes, you're right. Yeah.
Okay. Thank you.
Because it is it's an open phrase, and it's a very generic situation. And I know it's difficult, but for an SME would be of great assistance. If you can refer to this situation with some more example or guidance, you know.
I think just on that, before we move on, maybe, is we did have some guidance on how to make that assessment, and that was issued a number of years ago in relation to undue cost or effort and how an entity should go through that process. However, I do understand, I think it maybe is only on our website and hasn't been included in the standards. So it's maybe one for us to think about. So question number 5 then looks at fair value measurement. So the proposal here is to introduce a new section 12 to align with the definition of fair value in IFRS 13. So what we have done is we've taken section 12 currently covers financial instruments, and we have put that guidance into section 11. So section 11 covers both basic financial instruments and also more complex financial instruments. And then that means section 12 covers fair value measurement, and it is now aligned with IFRS 13. So that has the requirements on how to measure fair value, and also it brings together all the related disclosure requirements. So question 5 asks on this section, do you have any comments and suggestions on it?
Right. Well, on this question, first, we welcome this discussion and the proposals posed by the project. And as we have some suggestions indeed, and to amplify the appendix of illustrative examples, like in IFRS 13, with some adaptation for PYMES, for SMEs. The second suggestion would be to implement some guidelines for the definition of market participants to be considered in the application of the dispositions in the section of the better use of a financial asset. A third suggestion would be a guideline when we have those undue costs and efforts in relation to the relevance of the amounts in the financial statements. We recovering some discussions, some practical discussions on undue costs and efforts. Usually we stay in situations on which the cost of changing a system or obtaining an information or to understand the legislation, when you compare to the amount of the transaction, when you compare to the, let's say, pervasiveness of the transaction, you conclude that is not relevant. So then you bring the question of materiality in the discussion, as well as the situation of the transaction in itself. So it, of course, will depend on the circumstances and the case that you are analyzing. But the basic discussion that we have when we are discussing due costs and efforts relies on the amount of efforts that you have to gather, to put in place, to obtain output, that you have to consider not only the amounts, but the sensitivity of it for the stakeholders. So I'm saying here is something that comes from discussion with regulators. Perhaps we can get some part of these discussions and transform it in a guidance, an accounting guidance. No. Well, that's why we are addressing this suggestion. This third suggestion is linked to other questions, perhaps, on which we have this kind of situation of undue cost and efforts. That's it. But basically, for this question, we have those comments.
Thank you. Yeah, lots of good suggestions and comments we can go back and think about. Moving to question 6, and that focuses on joint arrangements. So here the proposal is to update the definition of joint control to align it with IFRS 11, but retain the classification of joint arrangements that already exists in the IFRS for SME standard. So not changing the classification of a joint arrangement to the 2 categories that exists in IFRS 11, but retaining the 3 categories that exists in the IFRS for SMEs already. So question 6 asks, do you agree with the proposal to align with the definition, but retain the classification of joint arrangements in those 3 categories? And also, do you agree with the proposals to introduce requirements for when an entity participates but does not have joint control?
Well, GLAS is in agreement with the proposal. Once it improves what is in the full IFRS, with more simplified requirements for SMEs, which facilitates a lot the information shared or provided by the SMEs with their interested parties, with the stakeholders, because a stakeholder which is used to work with full IFRS will deal with SMEs more easily. Okay, it's our general comment. However, again, we think that some guidance is important for SMEs to evaluate the legal form or the structure on the constitution of joint arrangement through an evaluation of the rights and obligations, as well as it's contained in the practical guidance of B12 to B14, is some other factors and circumstances that it is in B28 to B33 of IFRS 11. So I think some guidance could be good if we could provide on those circumstances. We also have minority opinion. So here it was not unanimous. We have a minority opinion which believes that would be in their preference to eliminate the 3 categories, remarking that this would better align to IFRS 11, and as well as the eliminating the options of measurement methods, which are in the section, proposing to apply the equity method as it is in IS 28. It was a minority opinion. But in our process, when we have a minority opinion, which is important to mention, we do so. ISB also proposed to change section 15 to align with the requirements of the paragraph 23 of it's your second part here, no? So the question, I don't know if I can jump so for the second 6.2. We are in agreement with the proposal for modification of section 15, without making any simplification, and because it will better represent the rights and obligation of the participants of the agreement. So we are in agreement with this proposal too. I refer to you, Easton.
Thank you, Jose. That's very useful to know. Again, your thoughts on this, but also where other opinions were voiced by the group.
Right.
But we move on then maybe to business combinations, and that's the final question on this topic. So here the proposal is to introduce requirements for step acquisitions. So when a SME who already has an interest in an entity goes on to acquire an additional interest, and it obtains control of that entity. So we see that as relevant to SMEs. So there's a proposal to introduce requirements covering such transactions. And then the other proposal is to simplify the acquisition method by not introducing the option that exists in full IFRS to measure a non-controlling interest at fair value. And that was done to avoid having an accounting policy choice around the measurement of non-controlling interest when applying the acquisition method, given that we considered choices to add complexity to SME's application of the standard. So question number 7 asks, do you agree with the proposals to introduce requirements for step acquisition? And then the second part of question 7 asks, do you agree that not introducing the option to measure non-controlling interest at fair value is an appropriate simplification?
Right. Listen, Glass is in agreement with the two proposals contained in the two questions. The point here is that we believe that will simplify the life of an SME in an area which is very complex, and so we are aligning with the proposal.
And then for step acquisitions, was that something that was considered to be relevant and then worth including?
Well, to reach to this conclusion that we are in agreement, and we too, the group consider why not to compute for fair valuing of non-controlling interest. Because usually in a transaction, you can found the basis of the consideration paid and fair valuing the assets, and nobody is blind when you go into a transaction. So perhaps this information relies on the shelf of the owner. And we didn't see a conceptual reason for not applying the fair value for non-controlling interest. But on the other hand, we were very sensible that an SME cannot have this information. We cannot assure that all SME can have this information, despite the fact that we believe the owner of an SME can have it very fresh in its mind, the variables of the transactions he entered or she entered to in the past. But we cannot grant if they have system that will maintain this information available. That's the practical difficulties that we may face with SME. That's why we think, let's simplify the life of these SMEs, and that was basically the why we don't have any opposition for this valuation. In the end, we agreed. We commented in the Tadeu can well remember. We commented on I think it was in the first outreach, that we had some concerns on this pact, but we developed it with the discussion, and we concluded that it's fine. It's better having an improvement showing, right, the step-up acquisition, and having a criteria for those kind of non-controlling interest, that having the situation that we have today. I think it's an improvement. That's what the group considered too.
Thank you. It's useful to know the thinking around it and the reasons, and yeah, hopefully those will also be in your response, the reasons why you agree.
Right, for sure, sir.
So moving on to question 8, so that covers revenue. So the ISB is proposing to revise section 23 of the standard to align it with the principles and language used in the new revenue standard, IFRS 15. And here it is proposing to make that alignment with also a number of simplifications around those key areas of judgment which have to be applied when an entity applies the 5-step revenue recognition model that exists in IFRS 15. Also, the board has simplified the language and the terminology that is used in IFRS 15 to make it easier for SMEs to understand and then apply. So the question asks, do you agree with the revised section 23 would be appropriate for SMEs and their users of the financial statements? And if you do not agree, what modifications would you propose? The second section of question 8 focuses on the guidance that exists in the proposed revised section 23, covering the judgment around whether a good or service is distinct, which drives if a contract contains multiple performance obligations. And the question asks, do you think that guidance is adequate and appropriate for entities applying the standard?
Right. Well, GLAS is in agreement with this proposal to rewrite completely the section 23. Of course, it's a core standard, and it will bring a very welcome alignment, and it contains a better discussion of elements that is embedded in the revenue recognition process. So having only one conceptual MAR standard would benefit all the users. We have some proposals for clarification on which we recommend that the glossary could be reviewed to emphasize the economic substance, the economic reason of the transaction over the form. And it's pretty common and for small and medium entities that the culture is more linked to taxation. In several jurisdictions, taxation is based on the formal analysis of a contract, following, let's say, the Roman code of law. So it's very important that we bring to the surface the definition of economical substance of the transaction prevailing over the form. And a consequence would be that the contract is not what is written, but what is in the underlines, no? And because this section is based on a contract. What a contract is, what the formal contract is posed there. So in many circumstances, the accounting consequence will be different. What is in the contract is proposed in the contract. So then I think that some guidance could be brought on these. It's very important in Latin America, considering that, as I said, contracts are made considering the law, which is based on the Roman code and not in other principles. Additionally, some concerns were revealed in terms of the impacts that would occur in the simplification to establish if an entity acts as a principal or an agent with clients. If you take the IFRS 9, it's based on the principle of control transfers, if you are transferring the control or not, and which is being considered by different industries, etc. However, the introduction of a classification by indicators could imply differences in some sectors. And mainly if we are considering that we are looking for comparability. So the question here, how we could have a guidance for set the lines when you are acting as an agent or not, or as a principal, right? Looking to the final part of the question, we consider that a guidance presented is adequate, is appropriate for the application. However, we believe that some illustrative examples would be important for those kind of entities. As I said before, they need some more directions as an SME. I think these are the comments we have for this question.
Thank you, Jose. Just one follow-up would be, you mentioned the principal versus agent requirements. That is, we've had feedback on that topic throughout the outreach, but we were wondering on that, if you, given your response, maybe suggestions of how you think the simplification or the requirements that are already being proposed might not be appropriate, or areas that could be changed, because you mentioned that it's useful to have guidance on that, and we have put guidance in the standard. It would be useful to have feedback on whether that guidance will work or not.
Okay, it's noted. We're going to look into that.
Okay.
Thank you.
So then we move on to question 9. So that focuses on a specific simplification that exists already in the IFRS for SMEs standard, and that's again the measurement of defined benefit obligations. And paragraph 28.19 of the standard gives simplifications around the measurement process for that obligation, and that's existed since the standard was first issued. The board received feedback on that simplification, and they heard that few entities apply the simplification, and also when they do apply it, there's diversity in how those requirements are interpreted and then used. So the board is proposing to remove the simplification by deleting the paragraph in the standard. So the question asks, do you agree that the application of the simplification is limited and therefore it should be deleted? And then if you disagree with that proposal to delete, do you agree with an alternative approach that the board sets out to clarify the application of paragraph 28.19?
Okay, it's another crucial question too, isn't it? Well, we have split here to, despite the fact that it's not a prevalent practice in our region, we have noticed that 3 practices apply this section when measuring employee benefit, mainly post-employment benefit. So, so the majority of the jurisdictions here, they do not apply. But we have some of them that believe that it should maintain this simplification under paragraph 19. And others, they believe that it should be removed in order to align. And the point for the ones that believe that should not be removed, it's because it can imply in additional costs for those type of entities in providing detailed calculation on the actuarial information, which it depends on the method the entity is using. Let's say we have, when you look to the actuarial issue, we cannot leave apart that it's a specialization in accounting for these. So when you look into the simplified models of the actuarial information, it can be miles of distance from the unit credit method, so projected unit credit method. So it can represent a huge cost for those kind of entities. And the same problem that it can represent for SME is the same, is the advantage of implementing it. In other words, it will bring more detailed information, more transparency in the calculation. And that's the point. So it's a matter of looking to the situation that these the SMEs are. And so we have a split here. We will deliberate it, as I said, by tomorrow and on the final word. But don't be surprised if we keep the split.
Thank you. It's useful to know the background to both sides, and whichever way you end up responding, it would still be useful to know those arguments for and against, especially when we hear that the simplification might result in more costs for entities. I think that was what I took from what you were saying, which obviously isn't the board's intention when they introduce a simplification, for it to result in more costs for SMEs. So it's very interesting background and good to hear that it's been discussed so thoroughly.
Right. Yeah, the point here is if we go deep in how the actuarial methods are applied, it's an area in which you don't have consistency among the regulators. One regulator requires a method, or accepted the method you choose, which is better for your cost plan and how you manage the plan. So it's not here to see here, for example, in our jurisdiction in Brazil, actuarials, they use the cumulative method. And when you prepare the full accounts under reference, you have to move to projected unitary credit method. And you have relevant difference, but the amount of time it's involved on that is considerable. So when we go to this scenario to a SME, the cost could be very, very, very relevant for applying that, because SME, they don't have an actuary in their payroll. So they have to hire, they have to discuss. So it's a logistical problem, practical problem. So a simplification was very welcome in the past. It's good that we have. In our region is not a prevalent practice. So keeping this simplification will not bring qualitative, we will leverage the qualitative information as we think would be, right? When you look into the conceptual discussion. So conceptually speaking, it's good. It's an alignment. But when you look in the practical implications of that, I think the guidance that ever existed for SMEs in terms of simplifying the lives of those guys, I think it's important to consider here.
Thank you.
We'll put it with those tones, but I don't know if we are going to have a major opinion here. Probably we are going to be a little bit split. Sorry, we cannot go further because this is the reality here in the region.
Understood. So then we move on to question 10. It looks at transition. So the appendix to section 35 of the standards sets out the transitional requirements for moving to the proposed third edition of the IFRS for SMEs. The default approach to transition is a retrospective application of those amendments. However, in a number of instances, we've provided exceptions to that rule. For example, section 23 covers revenue recognition, and for the new model, we're proposing that entities have the choice to apply the new revenue recognition requirements prospectively. So we have an exemption from a retrospective application. So question 10 asks, do you agree with the proposed transition requirements for the amendments to the standard?
GLAS is in agreement with the proposals contained in the project because it's the way that it's known when applying IFRS. I think it's we don't have any remarks here, right? We are in agreement. We have a 100% consensus on that.
Great. Then we move on to question 11 that looks at the other proposed amendments. So the questions 1 to 10 cover certain changes that are proposed. However, there's a number of other changes that we're making to the requirements of the standard. So we're asking, do you have any other comments on those other proposed amendments in the exposure draft?
Well, actually, we have several of them here, of course, for your consideration, if it will. But we didn't avoid describing what we would recommend here. So for the section 3, for example, presentation of financial standards, we are asking to incorporate a materiality guide based on IFRS 2. You know, when you have judgment on materiality and relative importance, which is available for full IFRS. So we could get it and incorporate in the session. Each one. I questions regarding wording specifically. So changing the wording, for example, section 5 to keep the paragraph 511, the word present in place of the proposal for the candle to, I think it's proportionate. It's so it's a change in the wording there. We have another one in the section 7. I don't know if we have time to go all through these, or I have I think more than one page here of suggestions. It will take some more few minutes, Tadeu. Can I go through that? Listen.
If I can suggest, if you go to the next question, then we come back to this question, depending on the time that we
Yeah.
Just try to. Otherwise, as you said, I mean that we can even for every single topic here, we can get into the details. But what I would suggest, if we move to the next question, and then in the end we come back to this question, and if you can select some of the main items that you think that are most important, we can go into details.
Yeah,
Can I-
because that we pick many aspects of the full IFRS to bring it to certain sessions here. For example, to study the incorporation of the appendix to the section regarding income taxes, to take the illustrative examples of IS 23 about uncertainty on certain tax treatments, right? So,
Okay.
so we pick several examples that is listed here. I think it would be perhaps more productive when you get it. We can discuss later about it if it's not self-explanatory.
Yeah, because when you refer to section 7, that statement of cash flow, and then I said, oops, we are going to probably end up here discussing a lot of things if we start going section by section. But yeah, no, but it's definitely, as you said, I mean, once we get all them, maybe just to those that we want to clarify, we can even arrange another specific outreach to discuss that one.
It will be fair indeed.
Yeah, okay.
I think, yeah, we can move on. I would say when you are making recommendations that we consider bits of full IFRS to put in the IFRS for SMEs, we are always conscious of length and adding complexity. So if you have any suggestions about how to simplify those areas, or just focus on the key elements that you think where guidance is missing, that would be appreciated, because just transplanting sections into the standard often adds length and complication we're hesitant to do. So, but we move on to leases. So here the proposal is to defer consideration of alignment with the standard with IFRS 16, and that focuses on the board's concern that at this stage in the life cycle of IFRS 16, the costs might outweigh the benefits of alignment. And also the board had a number of other projects where they'll get more information about how the costs and benefits could be better aligned when looking to introduce the new leasing model into IFRS for SMEs in section 20. So question 12 asks, do you agree with the decision of the board to consider amending the standard to align it with IFRS 16 in a future review of the standard?
Well, it was another crucial questions indeed, and because we have a kind of split too here. We recognize that would be an improvement for the financial information when you apply IFRS 16. It was an improvement for the full IFRS. It would not be different for SMEs. The question is, when you pose it for an SME, perhaps it would require a simplification or, I don't know, additional guidance, right? So when you look into favoring this alignment of IFRS 16, of course, the cost benefit is important. But on the other hand, we were a little bit concerned with the information that SB is considering a simplification in the future. As an accountant, thinking with the head of an accountant, we don't know what kind of simplification would be proposed. So in principle, we cannot put a condition in our response in agreeing with that without considering the milestones of those simplifications. So it's a kind of thing that you say, hey, I am in agreement, but I don't know exactly what you are going to do. So it's a kind of agreement with some qualification, you know. It's one position. So we, in order to agree with that, it would be important that we could progress with how ISB envisage the simplification. Now we stand with that. We have opinions that prefer, of course, prefer a full alignment and not waiting for the 4th edition of PYMES standards to be in place. So to align in the future can take more than 10 years. Those constituents believe that it's the full alignment would be recommendable, mainly because of timing, you know. And as much we defer the application of this kind of a core standards, more transactions would not be reported. More new transactions that arise under description would not be captured. So what is the usefulness of the information if we don't have a so important standard? This is in the block of people that believe that we should align immediately. So in general, these are the views that we have in this question. Is basically we have people that is against because they don't know what is going to be proposed in the future, despite the fact that we agree. And we have people that believes that it should be adopted immediately.
Thank you. No, it's useful to hear both sides of the argument, and we'll look forward to seeing where your deliberations end up.
All right.
The question 13, this is on the recognition measurement of development costs, and the ISB is seeking views on whether it should introduce an accounting policy choice to recognize those costs as intangible assets. That's something that has not been possible for SMEs since the standard was first issued. However, the board is now using this exposure draft as an opportunity to gather views on whether that choice should be available for SMEs based on the criteria in IFRS full, which is contained in IAS 38. So entities would be able to capitalize and recognize those assets using the criteria that exist in full IFRS. So the question asks, what is your views on introducing an accountancy policy choice that would permit entities to recognize assets from development costs?
Right. Well, in here, it's an old claim from Glass for this alignment. So we cannot say other thing that we are in full agreement with that, this alignment. Mainly when you consider the criteria defined in paragraph 57, IAS 38, which will permit those SMEs to present in a more adequate manner their reality, economic reality of the transactions. Mainly now that we are, many SMEs, they deal with intangibles all the time, and intangible is very crucial for their survival So in many aspects, so it's very, very welcome that we have this alignment. It's an old discussion that we have here that Glass reported in previous forums, and we are happy that this is addressed here.
Just to emphasize, Jose, that just to see whether you see this as a full alignment or actually introducing an option.
Well, the full alignment.
Because actually, what is actually in the invitation for comment is thinking about an option, provided that the IAS 38 requirements are met.
I see your point, Tadeu, but what came up from the discussions are that we concluded that a full alignment would be the best situation.
Okay, fine. Thank you.
Okay.
It's useful to know, and in your response, maybe to give a bit of a background to why full alignment and not having the choice would be the better option. That would be useful to know. So question 14 covers the requirement for entities to offset equity instruments. So currently the standard allows where an entity receives cash or other resources where it issues an equity instrument, it's required to present that receivable as an offset to equity in the statement of financial position. So the presentation of that asset is shown within equity. The ISB has received feedback on this requirement, noting in a number of jurisdictions it conflicts with the local legislation and has to be removed by entities in order, jurisdiction and national standard setters, to allow the standard to be applied, given that entities are not required and unable to present such assets in this way. So it is proposing to seek views on the removal of this requirement, and question 14 asks for views on this topic.
Right. Glass is not in agreement with this proposal for two reasons. One is because the majority of the legislation in our region does not permit it. Secondly, is based on the economic reason of the transaction. We don't see any substance of showing an asset which is not certain that it will be a cash in the future. Mainly when you take the arrangements of an SME, sometimes the family or some owners, they keep it for a long time. So we don't see any economic reason for this presentation on a separate basis. So we are very used to see the current practice here is to present the net amount in equity. On the other hand, if we go to the proposal, we are going to create some consequential effects when you analyze it under IFRS 9 or to estimate the possible credit losses or the impairment. So we are going to be facing consequential problems when applying this option of classifying separately. So that's our conclusion. I think was very, very close to 100% agreement in the group, and so that's what will be written in our response system.
Thank you. It's good to know there were such strong reasons.
Just to clarify in relation to the proposal on question 14,
Mhm.
the proposal is to remove the sentence. It's not actually saying that if it happens, we should recognize the increase in equity and the asset. We are just removing the paragraph. It's like being silent in relation to this one. And the main reason is to be consistent with IFRS 9, that is silent in relation to this. That's, I mean, that I agree with you, but it's just because we heard some people say it may conflict. Actually, what is now may conflict because some legislation requires the recognition of the asset. I may, and I can tell you that I disagree. I don't, as you as well. I mean that it is not an asset. There is no increase in capital, but this is not something that is in IFRS 9 because there are so many different types of instruments and etc. And then at this moment, you don't have this kind of very strict position as we have in 22.7a. We are just removing the sentence. We are not actually determining what is the accounting for.
Right. Yeah, you are just taking off the needle from
Yeah, something like that.
But I think it's the point. I think that's where we discuss the consequence of it. Of course, we got the impression that we are reducing the bar level, no, and so that's why we believe we are not here, Tadeu, we are not taking the full IFRS as an argument, because this is the moment of reviewing for SMEs, right? I think for full IFRS there will be a time that this issue probably will be rediscussed, but we also have to consider that for SMEs we don't have let's say a regulatory aspect so strong as we have for larger entities. So we consider that removing these words would open the door for such small companies to fit the situation in accordance with their understanding. So mainly considering that stockholders deals for such companies, they don't have a regulation, or it's in the private law, and you know, we were very concerned about it. So it is a different view when you compare to the full IFRS. As I said before, until now, as far as I know, we survived in full IFRS with this because we have a more public inspection on it than when you look into the SME. But I may be missing some additional comments here on supporting our response. So I ask my mates here if they have any additional comments. Please comment. It seems to be a teeny change, but it's very relevant.
Oh, that's clear.
Okay.
So if I'm conscious of time, so if we move on to 15, so here is on the presentation of the paragraph numbers and the standard, so not something to do with technical issue, but more to do with presentation and accessibility of the standard itself. So the proposal here is to renumber the paragraph numbers when we're revising a section. So updating a section in full, by rewriting it, we will amend the paragraph numbers. However, we will retain the paragraph numbers when we're just amending a section. And what was the view, question 15 asks, on taking to the approach that has been taken to retain or amend paragraph numbers in each section of the exposure draft.
Right. Well, we are in agreement with those changes, right? However, in the case on which we have significant changes, as occurred in the sections 2 and 19, we would prefer having to renumber the whole section in the consequential corrections or changes referred in other sections. So only on those ones, I don't know if it's possible, no, but it would be better if we have a complete renumbering, because the changes are so substantial that would be easier to use it.
That makes sense.
Right.
So
we are in agreement in general.
That's great. Good to hear. So that comes to the end of all 15 questions. Just very quickly, next steps for the ISB. So as we mentioned, we are currently in consultation, and the deadline for comment letters is the 7th of March, so next week, just around the corner. Once we get the comment letters, we expect to bring a feedback summary to the board in the second quarter of this year, and then individual proposals will then be deliberated by the board. We then expect to publish the 3rd edition of the standard with those finalised amendments in 2024. So that's where we're heading, and we very much look forward to receiving the comment letter from yourselves. And then the final slide just shows the different ways you can get involved in the consultation. As we mentioned, there are lots of different resources, but with the comment letter deadline being very soon, I do appreciate perhaps you're already familiar with many of those that are shown on the slide. But that was all from myself. I'll hand to Tadeo if he wants to give any remarks.
No, it's just to really thanks all hard work that we know that Glass did in terms of looking every single question. We know that this is a different standard. When we are reviewing one specific standard, it's just one subject and etc. But this one is just, it's like reviewing all IFRSs. Is a quite and we know that within our group, technical group, we know how difficult it is to even here, for example, you are moving from business combination, then recognition of revenue, and then we discuss about financial instruments. I mean that it just involves all sort of accounting, and then we really appreciate your comment, and specifically, Jose, some of the answers that you provided, you also, even if you were in agreement with us, you provided some feedback why you are in agreement. This is something that we think that's important as well. It's not just even if you agree, we still want to see a bit more comment and etc. because it's something that definitely helpful in our process of redeliberation at the board. Thank you very much for you all.
And the other way around too, no?
Yeah.
So, Tadeo, I have to apologize if I missed some comments while I was talking about our response. Some comments that is in the chat that came from my mates, basically from Noreli. I don't know if you can read it in the chat.
I can't see that in the chat.
Right, but it will be in the letter. For example, I didn't mention that when you look into agriculture, so biological assets, it's important to have a clarification and guidance when we talk about matrix, so animals that are matrix of reproduction. So when it's one topic that we are bringing to our discussions for a long time, that an improvement would be necessary, not only for SMEs. Right?
Yes, it's the concept of the better animal, not the better plants to bring this to the better animal as well.
Yes, the better, yeah. And capitalization of borrowing costs, that we think it's important for SMEs, and it's another discussion that we are holding with you, and I think it will be addressed in the letter in some place there in the section 27.
No, excellent.
Right, so I apologize if I missed that during the presentation, but it's here and will be there. You don't be surprised when you look into that there.
Yeah, well, just in relation to the capitalization of the borrowing costs, Jose, and I am very aware of this discussion,
Right.
and I think that one of kind of killing argument is in relation to the fact that in Latin America we have many countries experiencing inflation, hyperinflation, and or high interest rate, and then when we do not capitalize, if we for IFRS 4 believe that you have to capitalize, it probably we believe this is the faithful representation, and then when you do not capitalize in an environment where you have a high interest rate, it's something that's challengeable. Why is faithful if you're not capitalizing? It's not just a simplification, it might have a major impact. And when I had this discussion with Bill, Benjamin, Carlo here in London, when we have the opportunity to meet and discuss, it was very clear the point. And I would appreciate if the letter can not only say that you would like to see that, but also explain why you believe this situation should be considered. That would be very helpful.
Yeah, we only a small comment here, despite the fact of the relevance of the cost of financing in our region, is a factor that inhibits business development here. The cases on which you have a small and medium entity with some leverage, right? They are permitted to raise funds in banks and pay for that. It's for managerial purpose that we have to consider this in our core standard. It's impossible for the owner not considering in the cash flow projection its ability to pay the debt. So when you look into a situation, the guys say, well, why I have this tremendous loss in the beginning of my project, while I have the full capacity of recovering that in accordance with the plan that I sold to the banks. They rely on my plan of having the return on this investment. I cannot survive, or I cannot show this balance sheet to the bank because my equity is negative.
Mm-hmm. Yeah.
While I'm showing you that year 1, 2, 3, or after year 2, we have blue sky. So it's common, like having lunch every day, that we have the discussion with those SMEs. So there should be a connection between those two fields of reporting. I remember very much, Tadeu, at the time the wind powers were being implemented for electricity generation.
Yes.
So in the beginning, what they sold in the project, they sold wind, right? So they have to measure the factor of energy that the wind would generate, and they went to the bank, they sold the project. In the beginning, it was a small project, and as soon as the bank relied on the projections and released the money, they have to account for the interest and the results. So for those kind of situations, it's very crucial for those entities that they are accessing the capital, the financial market, and they can have a kind of a situation that inhibits to move on, right? So it would make a lot of business sense that we could have it mainly in markets like ours, because it would give a recognition that you can recognize it. But of course, we have the impairment analysis to offset any risk of the accounting is misleading, right? So it's a discussion that is combined with several aspects of the business of the financial statements and not merely an isolated accounting practice. So that's why we pursue the discussion. We have a lot of hours spent by the group, the task force discussing it. And I remember that we have an outreach and discussing it in the past. And but we are thinking, we are bringing new elements to the discussion. So we would be very pleased if we could continue with this discussion and find, let's say, we could help you, considering our scenario here, to provide guidance or to permit to those entities to account for, to let's say, to recognize this distortion when you account for borrowing costs in those entities in our region.
Correct. Just remind you that this is not a question in the request for in the exposure draft.
I know.
Yes, that's why it's so important to, this one has to be very well grounded. I mean, that has to be very well written for us to consider. It's something I really, as I said, I have been discussing this, and I'm truly with you. I mean, I believe this is quite important, but I'm just stressing that we have many other jurisdiction, and because this is not in the exposure draft, it's quite important that we have this well supported.
Right. Thank you very much.
Thank you.
Thank you.
So thank you all, you guys that were here with us today. We are quite close to go with this project, so we expect tomorrow to wrap it up, and we'll consider the points that we raised here. Thank you very much for the team, Easton, Adeline, and Tadeo, for the time, for the attention, and we will send the letter, expect to send the letter in the due date, and we'll continue to be open to clarify or further discussion on that.
Okay. Thank you.
Thank you very much.
Thank
Have
you.
a great day and nice weekend. Thank you
You
all.
too. Thank you. Thank
Bye.
you. Gracias. Hasta luego.
Hasta luego.